And that should be going now. What's going on? Power Force Season 3 coming this fall. Mr. Premier. Dummy, I have no idea what that is. But okay. All right. So let's get ready to get started. First and foremost, my name is James. This is Dividend Talk brought to you by the 10-Minute Trader, where I invest in Dividend stocks, weekly cash flow, take you along for a safe, predictable, consistent 1% per week. Now, for those who tough on the math side, that's 50% or more per year. Now it is slow. It is boring. It is the same day after day. It's only 5 or 10 minutes a day. It's not that difficult. It was created for a 9-year-old, meant to be simple, safe, predictable. Okay, and no way for her to lose. If you need to, every once in a while, we'll introduce you to my 9-year-old daughter who originated this. She sparked the whole scenario. Started the whole worst didn't want to come up. Started the whole scenario. She crawled on my lap, said, "Daddy, what are you doing? Can you teach me?" Okay, so how do you teach a 9-year-old? Well, here we are. You are about to learn what it takes for a 9-year-old to invest in the stock market. A lot of adults don't get it. And still to this day, a lot of adults still don't get it. So it was created for a 9-year-old. Share it with you. No, free of charge. I'm gonna ask anything. I won't even throw a pitch at you at the end of the night. Promise. I'm not gonna sell anything. So let's see what's happening. Ask whatever questions you want. I will take a look at whatever stocks you have me take a look at. But what I dislike immensely when people don't listen. Now I like stocks that are predictable, consistent, and I know exactly what they're going to do on a consistent basis. Okay. Because I'm looking for a predictable income. I'm 61. I'm retired. I have no desire whatsoever to change my stubborn ways. That's it. Okay, this old dog don't want to learn new tricks. I came up from a time where if it ain't broke, fix it. If it works, just fine. Leave it alone. So I'm looking for 1% return every. You guys want to check it out? Fine. Let me just set some rule number one. Ask questions only once, please. Make sure. Take a look at something. You know something about. Specifically, is it consistently profitable? And does it have weekly options available? That's it. Buy the dip, get rich quick. I don't think so. Doesn't really work that way. I don't like to throw my eggs into that basket. Okay. Shell, good evening. K8, what's going on? Mamusky. What's happening? Jim, what's going on? Jim Craven, Steve, and Jim Childs. All right. Let's get ready. Hey, Wampa's here. Cool beans. Hey, Grace. Did you get a chance to get that spreadsheet opened up? It's kind of weird. Every time I get in there and I try to open it, but then again, it's coming from my computer. Probably could be what. Your opinion on today's gap. To be 100% honest with you, Marco, I haven't looked. I just turned my computer on like 5 minutes ago. Nothing whatsoever. Squirrel. Yeah, I don't do cryptocurrency. Sorry, Bitcoin. No Bitcoin. Mr. Toby, how you doing? Biodips. Okay. How can you lose? Simple. All right. So that's enough for the questions. Let's see what we got. What do we have? Joshua, Mr. Sweetness. All right. Ashley, Link, Ava, Dave. Mersha. Good evening. Super Rumbo. Interesting name. How's it going? VP David Graham wants to take a look at SoFi. All right, Graham. Let's take a look at SoFi. I would like it if by chance you could at least give me some indication of what it is you're looking for. Okay. So David, VP Graham. SoFi, $14.90. Take a look at that. Here's the high, here's the low. That's where it was a year ago. Here's where it is now. Look at the motion. Up, down, up. Oh, what do you have there? Let's take a gander at it. Before we get any closer, let's take a look at the numbers. Is it going to be a wise idea to buy it and try to make some money on it? Well, currently it's at $14.90. So the closest strike price is going to be the 15, and that's going 29 cents. Well, 29 cents on a $15 stock is just shy of 2%. Now 2%. What do I know about Coin X Pro? Nope, don't even bother. I don't do coins. You're in the wrong place. I'm trying to save you some time, some energy, and a lot of grief. You're not going to find what you're looking for here. I don't do coins at all. So let's take a deeper look. Does it make sense to jump into this? Because if I'm going to do a trade, I want to make sure it's a simple, safe trade. Okay. I'm 61. I have no desire to go back to work. I've been working since 1973. I'm kind of enjoying this semi-retired life. I call it semi-retired because I'm still working, but I'm not getting paid. I go to my mother's house and I work all day long. I go to my kids' house over there. Then I come home and I do here. But no one's paying me. So retired life not that great. If you're making money, stay working. The only benefit I got is I sleep until I'm done. Let's keep on. All right, so SoFi, you say, huh? All right. Well, let's zoom in and take a look at the numbers. A year ago, SoFi is at 633. Bottom of the year, 5589. Turn that screen a little bit. Turn that screen a smidge. Then I got to turn the light behind it. Got to get that reflection going. There we go. And the reflection's still there. Oh, much better. I can read it much better now. All right. So here's the high. Here's the low. Look at the momentum. Up, down, up again. Currently we're at 14.90. So we're at the 15. So let's see what it looks like. All right. So last 90 days looks like this. High, low. Where's the motion? Down, up. Well. It's at the high of the 90-day period. Well, what makes me think it's going to be better on the 30-day period? Because the last 30 days gives me a good idea of where it's going next. Well, here's our bottom. Here's our top. Well, if you take a look and you think deep and hard about your childhood days on the playground, you remember those teeter-totters or seesaws? They go up, go down. Well, stars do the exact same thing. They go up and they go down. That is it. Okay. The childhood teeter-totters. Okay. That's like the seesaw goes up. It doesn't go sideways. It doesn't go around. It goes up. Stars do the same thing. Here's the bottom. What's it going to do next? Next, come down. Well, it's just plain and simple. McGinty, what's going on, McGinty? Looking to see if SoFi works this week. I think so. I'm still thinking of having SoFi for long term. Okay. Sit tight. I'm not finished with SoFi yet. I still got a little bit more put into it. So personally, this week for me is not the time to jump in. Okay. Bottoms here, tops usually when you have an increase from 12 to 15, that's $3. $12. Okay, to $15. It's a $3 move. Now I know you don't think $3 is a lot, but $3 $12 stock is 20%. So ask yourself this question: if you bought something and it went up 25% in one month, are you going to hold on to it and hope it goes higher? Or are you going to take your profit and say, thank you, go on, take the money and run? It's up to you. Everyone is different. Some people say, let it ride. Okay, myself, I'm not looking for the let it ride horsey here. I'm looking for the give me a profit quick. Thank you. I'll get another one from someone else. We checked last night. This week, there's 10,160 companies, I believe it was. That's a lot. Okay, over 10,000, I think it was 116. Yeah, 10,116 different companies we can choose from. All right, so this one does this week. Well, there's a whole bunch more to choose from. Don't get me wrong. If you like SoFi, wait for that opportunity. Got a question over here. Okay, McGinty is Lululemon goodbye since it's down. It's almost all-time low. Well, the way I look at it, Lululemon is not on my list. And the reason it's not on my list is because that's not the type of stock I'm looking for. I'm looking for companies that consistently increase their profit share, also known as dividends. Because you have two different types of companies. Well, actually, you have three, but you actually have two. Okay, let me explain. You got your private companies, which you usually can't invest in. And then you got your public companies. Not those public companies. You have one on the left and one on the right. Well, the one on the left can take all the profits and put it back into the company for the company to grow faster. That's called a growth stock. I'm not looking for that. If you're here looking for tips on growth stocks, you're in the wrong place. I'm just trying to save you some time and effort. I'm looking at income stocks that pay a dividend on a monthly or quarterly or annual basis. Now, I like to take those and manipulate them a little bit so that I can get a safe, predictable cash flow on a weekly basis using good quality growth, not a growth stock, income stock. Because I'm looking for income. I'm 61. The money that I have coming in has to come from my investment in the stock market, which is weekly options. I buy good stocks and I sell weekly options against them. Known as the covered call. It's one of the safest trading strategies there is. It literally has hundreds of videos on YouTube explaining exactly what it is. You buy the stock at a certain price. You sell it at a certain day. You collect a premium. Cash flow. However you want to look at it. Cash flow for me. If I put up X amount of dollars, I want some type of return. Well, in this case, if I put up X amount of dollars, I want 1% return. So if I put up $100, I want $1 back. If I put up $500, I want $5 back. If I put up $1 million, I want $10,000. 1% is 1%, which way you look at it. Okay? So more money you get, the bigger your 1% is. And if you get that 1% every single week, well, that's over 50% per year. Can you live off of that? That's the question. Can you live off of that? Well, either you can or you can't. We're not done with SoFi yet. So that's the numbers for SoFi. Before we go on any further, let's find out why I don't invest in SoFi. Okay, it's a weekly option. The price is right. Chart looks okay. Let's take a look at season. Let's take a look at how often they increase their dividends and what that looks like. All right. Now, where we are now is Yahoo Finance. Yahoo Finance is where I go find all my fundamental information. High, low, when did it open, when did it close, did it pay a dividend, how long ago, what's the earnings, what's the book value, what's the revenue coming in, the revenue going out, the last projections, all that kind of stuff, going out, the last projections, all that kind of stuff. Well, here, I'm looking at historical data, which goes back to 1980s. Apparently, SoFi. It says 1986. That's weird. SoFi doesn't have any dividends. Well, isn't that weird? We're on a dividend channel. Okay. Dividend stock, dividend investing for weekly cash flow. Well, SoFi has no dividends. So how can I tell when it's going to move? How can I tell if they're consistently profitable? Okay, I'm a lazy trader. I don't want to spend a whole bunch of time. I'm retired. My working is over. Okay, my work week. I don't do that. My work week. I do whatever I feel like. I just so happen to enjoy. That's why I'm here. Well, besides I'm creating a video diary for my grandchildren. So when I'm gone, hopefully my knowledge will be passed along to you guys get to witness the road trip, so to speak. Okay, so this is why I don't do SOFA. There are no dividends. And there's a reason why I require dividends for all the stocks I use. Well, let me explain to you very simply why I like dividend stocks. Okay? Let me just find something here. All right, here we go. Now, a dividend stock is a company that takes some of its profits and gives it back to the investors, you and me. So when we buy the stock, we become owners in that company. Well, what I'm doing now is not just becoming an owner in the company, creating what I like to call a weekly cash producing asset. Think about it. You can buy a business, spend a couple $100,000 on a business, and it'll give you a 5 to 10% return at the end of the year. Well, that's great. Well, what if you took that same amount of money and invested into a style of trading in which you take that investment, put it in the stock market, manage it a couple of 15-20 minutes a day. And get a 1% return per week, which comes to a 50% return per year. Granted, I see you taking jobs off the job market. But after you get to a certain point, just kick back, relax, and you know what? I worked enough. I'm retired. Let my income come from here. Okay, so the reason I like dividend stocks behind me, you see your calendar. Okay. June 20, 2025. Well, this is called an EX dividend calendar. Each one of these little green dots represent a company that's consistently increased its profits and now are going to pay out a dividend. Well, there's four quarters in the year. January, February, March is quarter one. April, May, June, quarter two. July, August, September, quarter three. Which, by the way, is right around the corner. In 2 weeks, quarter three starts. Quarter four, October, November, December. So here's the thing. Each quarter has 13 weeks. Okay. Interesting thing. Most of these stocks pay a dividend every 90 days or once per quarter. So each quarter has 13 weeks, 66 trading days. 66 trading days for all these companies to pay out a dividend. So if you arrange your trading with a calendar, okay, just buy one. Collect the dividend. Next, sell it. Buy another one. Collect the dividend. Sell it. Another one. You could do that every week. 13 weeks. 66 trading days. So think about this. I like dividend paying stocks, specifically those that have 2 decades of increased profits. That means the dividends get higher every year. Well, think of it this way. You have the dividend kings. Dividend aristocrats, dividend champions, dividend contenders, and then for the fun of it is Warren Buffett's list. 300 companies. You take 300 companies that pay a dividend every 90 days. Or every 66, because there's only 66 trading days in a quarter. 13 weeks, 16 days. Okay. So if you have 300 companies all paying a dividend in that time frame. Okay. So from the first day of the quarter to the last day of the 22 trading days, 600 companies coming through that revolving door. And guess what? When the quarter begins again, they do the exact same thing. So the first week of the quarter, you got a set of stocks. Second week of the quarter, set of stocks. Every week there's a certain set of stocks. 300 stretched out through 66 trading days. 66 trading days, 300 stocks. That's bare minimum of 3 if you average it out. 66 days, 300 companies. That's about 3 a day, I think. Something like that. But think about it. Okay. Every single 90 days. Okay. McDonald's pays out a dividend. Okay. What is that? Let's count. Okay. That's week 13, week 12, week 12, week 11, week 10. So week 10, McDonald's, Stanley Black and Decker, GPC, Kimberly Clark, Pepsi. Okay. Week 10, week 11, BDX, what I forget. T. Rowe Price, Able Chubb, Coca-Cola. Week 11. Week 12, ECL, what the hell is that? Nordson. Week 13, Cincinnati Financial, Ben Franklin, Medtronics. And then it goes back to week 1. And then we do the count all over again. So week 1 to week 13, same stock. Over and over again. Why? Well, because they're profitable. Why else would you invest your money? Would you seriously invest your money into a company that's not profitable? I mean, think about it. That's silly. Okay? What do we have? My great grandfather has a whole bunch of Aflac. Is that a good one? Of course it is. Copa Airlines. Never heard of it. But Aflac is a great company. They're a dividend king. They've actually increased their dividends for 5 decades. Now, what you plan on doing with that stock? Well, hey, it is what it is. All right. So that's the reason I like dividend stocks. Also, to tell you. Okay. The date on the calendar kind of represents the date when I should start looking at it. Because stocks, dividend stocks, have a tendency to increase in value, actually go up in price just before the EX date. And if you knew exactly what the EX date is of all their favorite stocks, well then you could actually see a calendar. Oh, wait a minute, June 16th? Ooh, I can buy this stock this week. It's actually that easy. Because if a stock moves predictably year after year, and all the historical data supports that. Because the dividend is an entry into the data stream. In every single year. Can you imagine every single year? On the second question, that's 10th week, 11th. We're on the 11th week. Are we? No, 12th week. Holy shit. Yeah. Okay, so we're on the 12th week of the quarter. So every single 12th week of each quarter, those are the stocks that pay.
Hey, mama, cool beans.
All right. So if you knew when a stock was going to move consistently every single week, because that's what the calendar is for. It's set by the calendar. These stocks pay the first week of the first quarter. Well, these stocks pay the 10th week of the quarter. Every single quarter. So it's like doing the trades and then well, didn't we just do that 13 weeks ago? Yeah. Guess what? You're going to do it again another 13 weeks. Because General Dynamics, Cincinnati, Ben Franklin, T. Rowe Price, they pay every 90 days. And the ones that I like the best are the dividend kings. Look at this one. GPC, Genuine Parts Corporation. They have. I need two hands for this one. You ready? Two hands. You ready? 70. That's 7 decades of increased profits. Most of you in the audience are 70 years old. Yet this company has increased its dividends to shareholders for more than 7 consecutive years. And look at this. Pepsi. They're over 100 years old. Well, GPC is not 100 years old, but 70 years. That's nice.
Where can I get the dividend calendar?
Hey, David Graham. This here behind me. This is Think or Swim is a trading platform from Charles Schwab. Okay, that's where this one comes from. But you can go to Google and write into Google say, hey, dividend. Wait a minute. EX dividend calendar. Just put it in the search bar. You'll see a bunch of companies offering to give you for free their dividend calendar because they want your business. Charles Schwab wants your business too. Okay, I love this. I've been using this trading platform for 20 years. There's not a single thing I've seen online that hasn't changed in 20 years. Well, this thing changed. This thing hasn't changed. It's the same. Okay, Tom Sauce threw this together a couple of decades ago. Well, he sold it to the Ameritrade. TD Ameritrade didn't change it. And then TD Ameritrade got bought by Charles Schwab. But Charles Schwab hasn't changed it either. It's still the exact same as it was 20 years ago when I first started using it. They have a few extra features now, which is cool. All right. What do we have here? All right, move on. Three people in the chat. All right. Cool beans. Let's keep on going. John, how's it going? Victoria, how are you? Sherry, how are you? How much do you need to start for dividend stocks? Okay, believe it or not, now that they have come up with fractional trading, you can trade 50 cents, $1, $5, $20, $50,000, whatever you want. Whatever you're comfortable with. It's not the amount of money that you should be worried about. It's the consistency and the time value. Okay, if you're in your 20s, gold, wonderful. Okay, you got a whole lifetime ahead. If you're in your 50s, 60s, it's not going to be that easy. Okay. So everyone's different. Do I ever lose? Of course I do. Thoughts on GNLL. What the heck is GNLLN? All right, we gotta go back. Here we go. Okay, go to here. Go to there. And for the fun of it, now when I say GNLN, who came up with that one? GNLN. Who did that? How much did that one? Brandon. GNLN. Here we go. Hell no. What the hell? I hate it when people do that. Brandon. When I say I'm looking for dividend stocks that have weekly options and 2 decades of profitability. That thing wasn't even. No. It does nothing but just piss me off when people waste our time. Do I ever lose money? Yes. Encourage more viewers. Okay. Token meme. What is your win percentage? Because I know that's important. Having a positive. Okay. Johnny. CCJ. Johnny. What is CCJ, Johnny? CCJ. Ouch. All right. Well, I'm going to say no to this one right off the top. Reason being is look at this. You got your bottom at 35. She jumps up 70. That is a 100% increase within 2 or 3 months. Yeah, I ain't buying that. Okay, the profits are taken away. It could still go. Nothing to do with it. I don't buy it the high. Okay. I've never heard anyone say, "Hey, Johnny, take a look at this. It's absolutely highest it's ever. Let's buy some." What the hell? That's the time to sell, not the time to buy. In my opinion. That's just me. Call me weird if you like. Okay, so let's go back to this question right here. Token me. What is my win percentage? I would have to say. For this year, it's got to be over 99%. I got 3 losses this year. That's it. 3. I must have done at least 1,000 trades already. With the news, what stock should I be targeting for my option play? Anthony, I can't give you an answer to that one. Only because I don't involve myself into politics, religion, cryptocurrency, certain things I stay away from. Because they got nothing to do with me. You know, 61, they're not going to draft me. What am I worried about? You know, nothing they can possibly do are going to affect me unless they plan on something that's we're not going to be unhappy about. Johnny thinks that's Kroger. Scotty wants to take a look at Kroger. Now, I did buy some Kroger this morning. The numbers just look too appetizing to pass up. But hold that thought. Got some questions over here. Oh wow, lots of questions over here. Hi, hello. By the dip, blah, blah, blah. What's my opinion on today's gap? By the dips, blah, blah, blah. Kind of questions. Questions. Oh. Lagmoose. Wait a minute. Lagmoose dream. Who the hell are you? Also would like to. Okay. Cool. Okay. Cool. All right. Like you guys having a conversation on your own. All right. I was at TV Waterhouse in the beginning and had to relearn all the bio platform for years. About time. I get it. It changes again. Well, the funny thing is this has been the same for the last 20 years. And I love consistency. I do. If it ain't broke, don't fix it. If it's working fine, leave it alone. That's why you still see some of those cars from the early 1900s still running and driving. Weird. Let's keep on. GameStop, no thanks. I don't do ETFs. Okay. All right. So I'm basically ignore YouTube. I have no idea why that channel gets out of hand so quickly. Okay, Pelon, how are you today? IPO, Boxable. Okay, Max Smart. I said earlier, relatively new here. I like companies to have 20 years of increased profits. Okay. I don't do IPOs. Sorry. Kevin, how's it going? Anthony wants to take a look at Dow. What platform do you recommend to trade on? I don't make any token meme. I don't make recommendations. Number one, I don't know who you are. Nothing about idea what you want, looking for. I'm just showing you what I'm doing. You've got to figure out what works for you. Now I like Robinhood. I use Robinhood and I use Thinkorswim. Now Thinkorswim I use for my big Robinhood I use for my smaller accounts. Okay, because it's simple, it's easy, it's right there on my phone. Okay, I can be sitting waiting at a traffic light and make a couple of trades on my phone. Okay, I've done it a time. Okay, I can pull up my phone and make a couple of trades on the beach. I love my Robinhood. I don't like Thinkorswim trading platform on the phone. It's way too much information. What do you need to start? Well, Aldrich, you need the right state of mind. Because here's the thing. Your right state of mind, thinking and believing that you can do it. Because you basically have two choices and only two. And the funny thing is, they don't teach you this in school or college. How to start a good investment. How to balance a book. How to plan a budget. They don't teach that kind of stuff. Okay? So I can't really tell you what to do. But the simplicity of the trade that I'm showing you, it's simple, it's safe, it's predictable, it's consistent. It was created for my 9-year-old daughter back in 2008. She said, Daddy, what are you doing? Can you teach me? So how do you teach a 9-year-old when most adults don't get it? Okay, it's a simple trade. It's one of the simplest trades there is. It's easy. It's safe. It is so safe. As a matter of fact, you are allowed to do this trading strategy inside your IRA. Okay, it's just covered call. It's a simple, easy trade, and it's predictable. If I'm going to get 1% every single week from a covered call, that's over 50% per year. The numbers just make sense. And the more years you have to go, well, your account can double every 15 to 16 months. But you do have to do something. You do have to tend to it, kind of like a garden. If you take care of your garden, you have a nice plethora of bounty. That's a good one. However, if you neglect it, the weeds are going to take over and you're going to get nothing. Same thing with your money. If you take care of it, if you keep an eye on it, well, it's going to grow. The more you keep an eye on it, the more you take care of it, the faster it's going to grow. Okay, great. Trading strategy I got for free. Not charging anything. Ask me email, nothing like that. Okay. Let's do some. So give me a few good stocks to take a look at. We'll do a few trades, and you'll see how easy it can be. All right. Pressure. What's happening? All right. So keep on going. Desiree to Crow. Cool bean. Interesting name. I'm back and still George. Okay. Cool beans, Urban. All right. So Beast, we just looked at SoFi a couple of minutes ago. SoFi has no dividends, so it's going to be a no. Rob, same thing. I don't do most ETFs. I don't do indices. I only do certain companies. Certain companies. That's Dividend Kings, Dividend Champions, Dividend Contenders, so on and so forth. Why did I buy Kroger? John, we're going to go over that right now. All right. Black Guy Joe. Dividends for the money. It's hard to beat. Thank you, Black Guy Joe. Johnny. What would you put your Roth IRA if you're in your 20s? Okay, Johnny. I would set up my Roth IRA as a direct Roth IRA and be able to do a trading strategy that is optimal and simple. Okay, Roth IRAs can be great, and you can with this strategy in a Roth IRA double your money every 14 to 16 months. Freaking awesome strategy for 9 years. So let's take a look at companies and see which one fits and which ones make sense. All right. So here's Dow. Okay, I'm looking for five things. Anytime I look at a chart. Doesn't matter what chart I'm looking at. Five things. Number one, the high. The low. Where is it going? Okay. It should take you 3 to 4 seconds to figure that out. It's not that difficult. Then I want to move over to the numbers. The numbers. What can I buy it for? What can I sell it for? What profit can I make this doing a covered call? Now covered calls. There are literally hundreds of videos on YouTube explaining the covered call. At 30.57 to 30 to go from 47. Well, 47 is more than 1%. And we're going to do one on Dow, regardless of the chart. But I'm going to do one on Dow so you can see how the mechanics work. Okay. But remember, in the morning when the market is open at 9:30, all these numbers change. So this is where you practice your algebra. Okay, if I'm buying it for this, I'm selling it for that. How much am I make? Is that 1%? Great, wonderful. All right. So let's take a look. Dow was at the high of 55.84 last year. Bottomed out on DTS day 24.93. Sitting at 30. Let's zoom into this area here. Take a look at that. She drops. Okay, so we're going to do it at 30.50. All right. Because I like that. They've been around for about 100 years. Why the hell not? All right. First thing we want to do is get rid of this. All right. Now I'm going to change this right here. So it says covered call. I want to have the setup. Because once you change the trading strategy, right here, all the trading strategies. Okay. We're only doing the covered. That's it. Don't ask for any of the others. Just this one right here. It is simple. It's easy. 1% is target every single week over 50% a year. Learn something simple first before you venture on out to these other things. Because these other things, well, a lot of them have no profit, but they also have a higher risk. So risk reward. Okay, what I'm doing has almost no risk at all. Almost no risk at all. Now I say that for those people who like the who believe the government when they say who killed Kennedy. Okay. You believe that crap? Yeah. Okay. You believe anything. Anyway, let's get back to where we were. All right, so we're going to do the covered call. All right, everything changed. Now it is set up specifically for a covered call. I said I wanted the 30-50. That's right here. Okay, so I'm going to click on that, and it's going to preset the order. So everything's done for me. 30-50. Here we go. Now it's already preset for 1,000 shares. I don't want to buy 1,000. Do 100. It's easy. You guys to understand the numbers. Right. Then I just do I want market order or limit order? Now I hope you understand the difference between a market order and a limit order. Okay, a market order says, "Hey, I'll take it. Well, what price? Don't care. I'll take it." That's the market order. Give it to me now. This is what I'm willing to pay. Limit order is like, "Wait a second. This is what I want to pay. That's it." Well, I always do the market order because I care about the minor few pennies here and there because I make sure the numbers work before even do it. I love a naysayer. Here we go. Money covenant call is nothing more than a hedge to protect you from a downside pullback. Money, thank you very much. I appreciate that. Now, if you want to have a nice little debate, more than happy. I do a covenant call every single week for 1% return. ROI every week. 1%. That's over 50%. 50% for the year, my brother. That's what I'm making. Consistently for the last 15 years. Okay? No, he disappeared. Oh well. Is what it is. So make sure the numbers work. What am I buying for? What am I selling it for? Do I see a risk? Well, there's a risk with Dow. There is. Okay. No, here's the risk. Ready for it? The risk for Dow would be if Mother Earth opened up, swallowed up Dow and everything associated with it, and then disappeared, took it along with the Atlantic Triangle. It's a possibility. If you believe the Warren report, okay, submit it to the federal government. If you believe that, you'll believe that Dow could be sucked up into the earth and just disappear overnight. Well, it's true. Is there a possibility for Dow to go belly up and bankrupt overnight? Yeah, it's possible. But is it going to happen? Usually, if there's something going on, the company, first thing they do is start laying off people. Then they start cutting salaries. Then they start cutting this and cutting that. I didn't hear anything about Dow in the last 2 or 3 years. They're just trotting along. They've been doing the same thing for the last 100 years. Well, business as usual. All right, so let's get rid of that. Go back to here. So the difference between market and limit order. Limit orders. This is all I care for paying. Market order. Give it to me now. I'll take it whatever it's at. That's what I do. The reason being when I get into a covenant call, because the stock and the option are already tied together. So I already know exactly how much I'm making. Okay, so here's the order right here. Buy one covered call a Dow. That's the weeklies. 25. That's just the date. That's when this option expires. That's coming Friday. So whoever's going to buy this from me has between now and when it expires. 3:59 p.m. on Friday afternoon. Because at 4 o'clock you can't do anything. All right. That's $30.50 call option against the stock at the same market. Edit. At the market order. All right. I want market order. To open. No, they're not stuttering. They're not repeating themselves. It's actually two orders. You're opening two orders. So think of it this way. You're buying the stocks, which usually happens in New York, Wall Street. And then you're selling an option. Chicago Board of Options is in Chicago. That's two orders. One's going this way, one's going that way. However you want to take a look at it. It's two orders in one. And what I like about market orders in one, it will fill first thing in the morning. 9:30, 31. I'm usually done with my trading by then. So the nice part about it is my maximum profit. It's telling me right there. I already know my profit's going to be before I do the trade. That's what's so appealing about the covenant call. The stock doesn't have to do anything. It stays exactly where it is. And I already know what my profit is. $44 per contract. One contract, $44. Two contracts, $88. You know, 20 contracts, $180. So on and so forth. Same thing. Cost of the trade, including commission fees, $3,006. So let's bring up the calculator to find out what kind of rate of return that is. Calculator. Here we go. So we take the profit, $44, divided by the cost of the trading, the commissions and fees, $3,006, and that gives a grand total of 1.4 1.4% for 1 week. Not even 4 days. 4 days. But Monday's already gone. So 4 days left for this week. Okay. So 1.4%. 1.4% is way over 50% per year. Okay.
Money. Yes, it's possible. But stocks can drop 4%.
I'm well aware of that. But thank you for informing me.
Just there to support.
I can do cover my raw traditional van new to this. Yes, you can. Okay. Hypothetically speaking, I don't know anything about van, but I do know a covered call is one of the safest trading strategies there is. You can do it in your IRA. Okay. So we have a couple more questions over here.
What about Mara?
Okay, we'll take a look at Blackstone and Raytheon since they are going. Okay, thank you. Mirror your screen, agent. If I mirror my screen after a year and a half, I think I would by now. As far as I know, YouTube doesn't have that in their what do they call this thing? Their platform. Is that their platform? Or is it their live thingy? So if I do my camera, if I switch my camera, what are you going to see? You're going to see the curtains behind me. You don't want to see that. You don't want to see that. So there is no way of inverting it with the current software that YouTube has to offer. Sorry. So there you have it. 1.4% on Dow. Showed you the whole thing from beginning to end. Is it a good company? Well, it's been in business for over 100 years. Do you like it? Well, that's a big question. When did you quit your job to do this full time? See, Michael, I didn't quit my job to do this full time, and I don't do this full time. For me, this is just a hobby. I've been trading my own money for the past 25, 30 years. Because I knew 25, 30 years ago that those guys that are paying whoever paying to take care of your money, they don't have my best interest in mind. Because I've seen what they're offering, and I've seen what they're getting on a weekly basis. So you got two choices: learn to do it yourself, or accept what they're willing to give you. Give your money to someone else, let them do it for you, or learn to do it yourself. Alrighty. Cool. Now I know. Alrighty then. He is teaching very 101 fundamentals. What's up? Thank you. Tiny Coco. Hi there. What's cooking today? What's the live stream about? Tiny Coco, the live stream investing in dividend stocks for weekly cash flow for a predictable, consistent 1% per year. That's over 50% per year. That excites you. Hey, hang out, ask questions, see if it makes sense. Because it doesn't make sense to everybody. Some people just don't want to do it. And there's nothing wrong with that. Okay, appreciate your time. Fundamentals is what I need to start. That's what you always start with. Fundamentals. That's what I'm trying to understand. So would you lose money? Well, you'd lose money. Okay, here you go. How would you lose money doing it? I'll tell you. The majority of people getting started, they lose money by hitting the wrong button. I know. Sounds childish, juvenile, but trust me, everyone hits the wrong button at some point in time. You buy instead of sell, you use strike price, you do something that is just not correct. Okay, that's what the first thing people do. First mistake, you're gonna lose money. Basically because you hit the wrong button. And hey, everyone does it. I did three times this year. Another streamer looking for new members to join to increase his wealth and to offset. Okay, money. I'm not 100% sure what you mean by that. But you know, you're free to express your opinions any way you like. Okay, but preferably, looks in the path that you're going to take. You're going to have to come at me with something a little bit better than name calling. I've been doing this for a while, and I haven't met a single person yet in doing this. That's actually proven me wrong in any way, shape, or form. And no, I don't get my wealth from anybody enjoying whatever I'm selling. Okay. Okay.
My wealth already came,
and it's coming from
my
1% per week that I
earn
earn
on my little nest egg, for lack of better words. But I'm all game. If you want to try to stump me.
Okay, I'm here until 11:30,
and it's only 10.
An hour and a half to come up with something you think
I don't know, or you think I'm wrong about. Appreciate your time. Love to learn from you. This is awesome. Cool.
Scott Rich has lost his
losses.
I have no idea what that means.
All right.
Chris,
OSCR is the strategy just buy dividends and sell covered calls.
It's a little bit more to it than that, but basically that's what it is.
Not just buying the dividend stocks, knowing when to buy them. Is it the right time to buy them? And do the numbers actually satisfy what it is we're looking for? I'm looking for 1% every single week. Well, either it's going to work, or it's not going to work, or it's the right time to buy, or it's not the right time. It's not that difficult. The strategy is created for a 9-year-old. So yeah, you should be able to grab it like that and say, oh, easy. It's simple.
Okay, we get to that.
Okay, Chris,
OSCR, never heard of it. But let's take a look. But remember, I'm looking for companies that are consistently profitable. OSCR. Oscar Health. Why doesn't that sound familiar? Okay. Let's go to Yahoo Finance. OSCR. Okay, going to Yahoo Finance to see if they pay dividends, and see that's probably why I've never heard of them. And Chris, there are no dividends in the selected time period. Chris, that means no, because if they don't share their profits, why would I want to invest in them? Why would I want to?
Another stream of looking cake. Fine. Fine. Toolbar.
Do you only sell weekly covered calls? Absolutely, that's all I do. Okay. Patrick, Misty. Goodness.
Oh my goodness.
MSTY. Okay, we'll pull it up on the Yahoo Finance, just so that you will see whether or not it fits. Yield Max, MSTR option, income strategy, ETF, Misty. Okay, let's take a gander. Okay. Come on. Oops. All right, so apparently MSTY does have dividends. Well, let's take a look at them. Now remember what I'm looking for. I'm looking for 2 decades. That's 20 years. Okay. So let's take a gander. Hold on, a couple questions over here. Okay, Chris, OSCR, that's right now. Okay. Let's take a look. Now remember, 2 decades of consistent profitability, which means each number should get higher and higher. So let's check it out. Okay, so here's where I have a major problem with MSTY. April 4th, 2024 was their very first dividend. So that tells me this company is not even 2 years old. 2 years old. So when I hook up two fingers and I say I want 2 decades, how can you interpret that as 2 years? 2 years. It's not even 2-year-old company. When I say 2 decades, that's 20 years. Do you like it? Fine. I'm not going to bother looking at it. Scotty Cook, what's happening? What's happening, Scott? There we go. 101 CBs. Okay. Could I look at ASO? All right. I look for stocks that recently dropped in purchase. Is that a good tactic? John, that's an excellent tactic. Okay. How do we find the calendar again? Token. You find the calendar simply by going Google. Put it in the search. EX dividend calendar. And a whole bunch of websites come up that EX dividend calendar. I just happen to like the one because I get my own stocks into it, and I get to do my trading right here also because it already has it. Why hell not?
What is your profession? Engineering, I guess. The video is flipped. My dud. Tesla value investment. Tesla is a cash flow. Not cash flow investment. What do you call it? Growth stock. That's what it is. Tesla's a growth stock, not income stock. Okay, so 101 beats 11. Okay, you want to know what my target delta range is. I really love to meet your kids. If your 9-year-old understands what target delta range is, it's a hell of a lot better than mine. Because at 9 years old, my daughter had no idea what the Greeks were, and nor did I have the desire to try to teach her. So I don't use target delta range. I understand exactly what it is. But try explaining that to a 9-year-old. Doesn't work. Favorite stock this year would be US Steel. Thoughts on gain. Isn't gain a monthly optional stock? Let's take a look at it. G-A-I-N. Yeah, gain is a monthly. Listen closely. That person wanted gain. 20 June, 18 July, 17 October, 16 January. Those are months of the year. Now, I like to think you know the difference between a month of the year and a week of the year. It's 52 weeks and only 12 months. So why would I want monthly if I can only do it 12 times a year? I'm getting 12 to 24% a year. Now, some of you are okay with 24% a year. But wouldn't you prefer 50 to 100%? Now I understand some people don't have time to devote to their money and taking care of them. They just prefer to go to work and pay their bills. Nothing wrong with that. That's how the economy works. People going out, paying their bills, going to work. Fine. Well, for those that want to take advantage of their own, to be able to invest it yourself and get decent returns from something that is simple and easy. That works also. Okay, so gain is a no. I don't do monthly. The numbers just don't work. What was your worst trade using this strategy? What went wrong? My worst trade using this strategy. Before I learned about rolling an option. You ready for this? How long do you hold the underlying stock, or do you do the option on the same stock? Dawn, I do the same stock over and over. Let me answer Rick's question. I'm sure a lot of you want to know this. All right, you ready? About 4 or 5 years ago, okay, I bought Target at 135. All right. So I bought Target at 135, and it proceeded to drop down to 102. So I got five simple rules. Let me go over them really quick. Rule number one: never buy something you don't want to hold on too long. Rule number two: never sell at a loss. Rule number three: make sure the company's profitable. Rule number four: weekly options only. And rule number five: make sure the numbers work. Okay. So a few years ago, I bought Target at 135. Okay. I sold the 135. I think I got like 2 or 3% numbers. Great, awesome. Okay. The next week it went down to I believe around 132. So I thought 135 again. Normal. Okay. Then it started dropping. Every single week it dropped all the way down to 102. So when it's down at 102, I'm selling the 107. Okay, fine. So it goes from 102, 110, 107, so on. So it goes in the bottom for quite a while. Every single week, every single stock I get a rate of return, regardless of what it is. 1%, 2%, 3%, 2%, 0.5%. Now I was getting 0.5%, quarter of a percent every week from Target. All right. So that being said, in November, okay, we had what is called a black swan event. So it was at 110, right? It was at 110, closed at 110. Very next day it opened up at 130. I think it was 125. Okay, it jumped 15 points overnight. Well, lo and behold, I did not know about rolling options at that point in time. So I had no choice in the matter. I had to buy it back. That $10 jump in the stock. Well, it had a huge jump in the option. I had to pony up $15,000 because of that gap to the upside. That's called a black swan. They do happen. Okay. You can have a whole year's worth of profit be wiped out overnight. You don't know. Now I didn't know about rolling an option. If I did, I would have rolled that option. I would have and offset that loss over a longer period of time. And I wouldn't have had the loss. But it was a learning process. It was uncomfortable. But it is what it is. Now, just to let you know, I didn't lose money on target. Because as the stock moved up, so I kept on options until now remember this happened for 9 months. So every single week I collected a premium. Every single quarter I collected a dividend. So I got three dividends and like 35 premium. And I ended up selling it at I think it was like 135, something to that effect. Okay. However, I did lose 15,000. So a huge chunk of the money I made off a target evaporated like that. Because I didn't know about rolling options. Had I known, I would have rolled the darn thing. Okay. So that's my worst experience. That's not my worst experience. Trading. That's my worst experience. The covered call. All right. Anyway. Where were we? Do you do DTE? No, I do not. I do not like sitting in front of a computer. Okay. Where's your methodology? I don't see it. My methodology is simple. Okay, I do covered calls on pre-qualified dividends. Those are companies with at least decades of consistent profitability and weekly options. That's it. Two criteria. Consistent profitability and weekly options. That's it. That's all I'm looking for. OSR is a no. We already looked at it. It's a no. Ooh. Nods. Let's take a look at Occidental Petroleum. Cool. Here's a silly question. Now I know you don't think it's a silly question, but it's a silly question. Nicholas, did you win more money than you had lost? Absolutely. Why do you use think or swim? Tiny Coco, I have not seen, nor do I have the desire to even look for another trading platform that is superior for what I do. Okay, you gotta figure out what kind of trader you are, what you want, and then figure out what trading platform works best for you. Now, 15 years ago, I wrote a book, picking the best trading platform for your trading, something like that. That's the name of it. Although I've researched take a look at over 30 different trading platforms, this is the one that came out because this is exactly what I was looking for. Hey James, Chatterbox in the house. What's happening there, Chatterbox? Hey James, how are you doing? What are your thoughts on Medtronics? Ooh, like Medtronics. MDT. Let's take a gander. I'm gonna say no to MDT for this week. Now, don't get me wrong. I love MDT. I really do. However, there is a time and place for every Sunday heaven. That's some 2,000 years ago in that little book. Yeah. This is not the time. Take a look. Where was it? Down. Look at where it is. From the bottom here, because stocks go up. And they have profit, and it comes down, consolidates. People say, this is cheap, let me buy some. Back up again. Well, right here is a new bomb at 80. Then it jumped up to 87.92. Well, from 80 to 87.92, let's call it 80. It is what it is. What a 10% move. So take a look. Okay. 30-day bottom, 30-day top. For me, it's not time to buy at a 30-day top. Because usually think about it. What goes up must come down. Goes up. That's a 10% jump. Yeah, I take profits at 2 or 3%. How many people do you think are just waiting to take it at 10%? I mean, wait a week. If you really like it, wait a week. Wait for it to come down. Find a new bottom, turn around, go back up again. That's all stocks do. They go down. You find a good stock, stick with it. Look at it every day. I mean, how long does it take to take a look? It takes you 3 to 4 seconds to take a look at the chart. High, low, what direction is it going? Well, this one, it's going up. Well, hypothetically, it's reaching the top. Now it should come down. Hypothetically, it's not guaranteed. There's only three guarantees in life, and I know most you know two of them. All right, let's keep on going. For the average person, why trade instead of just owning great companies for the long term? Well, Dylan, here's the thing. Buying a stock to hold long term, what rate of return do you normally get? Well, over the last 10 years, the stock market has averaged 8 to 10% return. Well, if you're okay with that, fine, no problem. If you're okay with that. Now, in order for me to pay my bills at 10% ROI per year, I'd have to go back to work and double, triple, quadruple what is in my account so that I can afford to do that. Okay? I've been working since 1973. I think I put my time in. There's a lot of people out there I need a job. So why would I compete with those that need a job if I don't really need one? See what I mean? I'm doing society of favor. Stepping back and say, hey, let the young kids come in and take over where I'm leaving off. Okay? So buying a great company hold on for the long term doesn't pay my bills like this does. So think about it. If I have $100,000 and I make 8 to 10%, which is the average. Okay. Over the last 10 years, 10% of 100,000 is 10,000. That's $1,000 a week. No, sorry, that's $1,000 a year. Let me try that again. Okay. 100,000 a year is $10,000. You break that up over a month. That's right around $900 and some odd dollars. So $900 some odd dollars a month to pay all my bills. Yeah, that's not going to work. Okay. So my $100,000 account is giving me $1,000 a week. Well, that pays all my bills. Okay. So I have no desire to go back to work. And it kind of insults me when people trying to live my life. But thank you. Yep. Inverted HS. It happens. I'm getting my 5% from my stocks weekly. All right. Kate Lee, boss lady, nice to go. Ulrich, you're right. That's two. What's the third one? Ulrich, tell me what the third guarantee is for life. Okay, if economic volatility causes traditional investments, where should prudence capital allocations? Okay, Brad, you had to come up with a better question. Straight to the point. And pretend like you're talking to a 6 or 7-year-old. Use words that are easier to understand rather than me have to break out a dictionary. Okay? Next. Russian. Alex. Kagala. Did you make covered calls when stock loses money? Absolutely. Because these stocks don't lose money until you sell the less than you paid for. Think of it as any kind of asset. Car, house, artwork, cryptocurrency, anything. What you buy it for is what you pay for. That's what you think it's worth. Okay. So what happens in 2 or 3 weeks when it goes down in value? Do you panic and sell? Okay. You bought a Picasso for $10 million, and someone says, I don't like it. Now it's only worth $8 million. Do you sell it at a loss? Probably not. If you buy the house next door for $300,000, and all of a sudden, when the major stores closes, and now it's tough in the economy, real estate goes down, do you sell it at a loss? Probably not. A cash producing asset is what it costs you X amount of dollars. So how you take care of that to be up to you. Do you bring in a professional manager to take care of it for you? Fine. If not, yourself. So here, what I'm buying is cash producing asset. Okay, so if I take $100,000 and put it into a house and get $1,000 a month profit, that's $12,000 profit per year. Well, that's only a 12% return. Well, that kind of sucks. Well, what if I took that $100,000, put 50,000 into Medtronic, put 50,000 into AT&T, and each one gave me a 1% every single week. Well, that $100 grand is $1,000 a week. Every single week, 1%. Well, think about it. It's a cash-producing asset. Well, if you treat it differently as a cash-producing asset, it will give you cash every single week. And the value will go up and the value will go down. That's why you have to watch it every single day to see where is it now. Okay, what did I buy it for? What option did I sell? What's the value now? What does that mean? What do I do next? It's like baking a cake. You put all the ingredients in, put the oven in, set the oven, and you check it, make sure everything's right, leave it alone. If something's wrong, you fix it, and then you proceed. That's it. Stocks go down. Yep. So what? They go down. Guess what they're going to do next? They'll go down, and then they'll turn around and go back up again. Very rarely will you see a stock drop down to nothing. Okay, when Enron went bankrupt, well, it dropped down, and then it bounced back up, and then dropped down, back up, until what happened.
But anyway, let's keep progressing. CD TikTok. Hey James, have another one. If you have the time to look. Mark, wait a second. Somebody asked me why did I buy Kroger today? Hold the phone. Someone asked why did I buy Kroger today? Well, I'm going to need glasses for this one. Oh, you ready? Let's go. Let's take a look. Kroger, KR. Now, to be 100% honest with all of you, Kroger was not on my list. It's not. It's on Warren Buffett's list. So yeah, if it's good enough for Warren, I'm going to look into it. So here we go. 3 seconds. Look at the 5 things. Once you know the 5 things you're looking for, 3 to 4 seconds. Here we go. High, low, what? Direction, down, up, down. That's it. Okay, right now, here we are. Not at the high, not at the low, somewhere in between. It went from just below 50 to just below 75. It's a $25 move. $25, $50 stock. That's a 50% increase from here to here. 50% increase. You're damn sure there's going to be profit. And then what? Came down. Now here we turning around, going back up again. Because there's only so much profit taken. Okay, the rest is holding on. Because remember how many people we have buying and selling. Well, you need some help. It's right here. 6.5 million. 6.5 million shares traded today alone. All right. Well, let's take a look at the numbers. And I'll show you why I bought Kroger this morning. Oops, nope. Those glasses still. All right. A year ago. 54. Bottom of the year was the end of June, and that was 49.93. Now it took about 9-10 months to find the high of the year, right here. Okay. April 22nd. That's the high of the year. All right, and that was 63. Well, a little bit of profit taking, rebounded, a little bit more profit taking, rebounded, and here's some more profit taking right here. 30-day bottom, 64.11. That was Wednesday. Last Wednesday. Thursday, higher. Friday, higher. Monday, higher. Yep. I jumped in this morning. Let's take a closer look at the 30-day chart to give you a better idea. Okay? Look, you cannot not see it. Look at it. Up, down, up. Well, where's it going to go? Look at all it has to run. Okay, now I don't know what you're looking for. I'm just telling you what I'm looking for. And for me, this is freaking lovely. For me. Now, before I get too excited, let's go take a look at the numbers and see if they make sense. Number one. What am I buying? 66 bucks. Right there. Okay. What is the $66 strike price selling for? So if I go to the store, pick up something for 66 bucks. Okay. I come home and say, hey, here's your for 66 bucks, and you slide me an extra 5 just for going to get it for you. Same thing. You're just doing someone else a favor. Think of it that way.
I'm going to a concert. I'm going to buy 4 tickets. 2 for me and my girl, and 2 for whoever else wants to buy them from me. Same thing. I'm just buying something for someone else. They're going to give me a premium for doing them a favor. I look at it. It also gives me a weekly cash flow. Check this out. 20 June. That's this Friday. 27 June. That's next Friday. 2 Fridays away. 3 Fridays. 4 Fridays. 5 Fridays. Every single Friday I can do. Or I can every single week I can do a call on Kroger. Now, is there risk? Yeah. There's what? 5,200 Krogers worldwide. So just imagine this. Simultaneously, the earth opens up and swallows up every Kroger there is. Could it happen? Could. If you believe the magic theory in the Warren report, it could happen. And I feel sad for those who don't know what that is.
All right. Can you explain why Kroger works well? Why do you think the Kroger stock going is a good sign? Uh-oh. If a quiz is called quizzical, okay, lovely. Okay. So why do I think Kroger is a good choice? Well, number one. I'm going to explain it to a manner, and I'm going to see if you get it. Now, a lot of people are going to get it like this. Let's see if you get it. All right. Now, Kroger, KR, stock Kroger is on Warren Buffett. That means Warren Buffett's buying this thing. So I'm thinking. Warren Buffett hypothetically is better traded than a lot of people. If it's good enough for him, it's good enough for me. However, I want to make sure I buy it at the right time. Now, when I say at the right time, what do stocks do? Now, do not feed me a bunch of BS because I'm not going to believe it. I've seen it over and over again. I've been trading for 20 years. I've never ever seen a little sign saying, hold on. I'm going to Johnny's house to mow the lawn. Doesn't work the way stocks go down. They don't come to your house, mow the lawn, they don't take the dog off, they don't wash the dishes, they don't even put little candies on the pillows. No, stocks go down. That's it. Okay. If your 30-day high is here, your 30-day bottom is here. Well, you explain it to me. Because I've been trading for a long time. To me, what it means to me is that at this point here, at $70.50, people are thinking to themselves, wow, I made a nice little profit. Let me take my and sell now. So when they do that, stocks drop. And it gets to a point where people say, wait a second. Kroger's at 64? Well, that's a deal and a half. Let me buy some. So those people who say, Kroger at 64, buy some. Here's the great opportunity. Kroger at 64. What happens? Stock goes up. How far is it going up? I really don't care. Personally, because all I'm looking for is that right there. The premium. I'm going to buy it at 66. I'm going to sell it at 66. What am I collecting? I'm collecting the gas money. Call it whatever you want. It's actually factually an insurance premium payment. Paying 4 things for a contract. Four. Okay. Beginning date, ending date, consideration, money changing hands, handshake, a piece of pie, whatever, some type of consideration. And 4, meeting of the minds, which means I agree with you. Thank you. You gave me that. Yeah, right. Fourth, meeting of the minds. I'm agreeing with you. You're agreeing with me. You're buying the stock for me by this date, this price. That's a contract. These options are contracts. They're insurance contracts. They were originally made intended for rich people not to lose money. So if you thought your stock was going to go down, you buy a put, and as the stock would go up, so you don't lose anything. Except for the premium. And if you're over the age of 16 and a half, you drive a car, well, you know you need insurance. Okay. Premium. Paid every month or every year, whatever. Okay. Home insurance. Health insurance. Okay. Car insurance. So now you have a stock insurance to protect you from losing or gaining of whatever.
But these are what they are. These are options. Stock options are literally insurance contracts. So I'm looking for the premium. That's all I'm looking for. That's all I'm looking for. Care less about the stock. My concerns are two, and only two. Consistency and profitability. Kroger's there. Kroger's there. Good enough for Warren Buffett. Good enough for me. Weekly options. It's there also. It's there also. Is it the right time? 30-day high. 30-day high. Now she's shooting up. Simple. I jumped in at 66. I picked up. Let's do one. Let's do some. Hey, Zachariah, basically Wyckoff. Never heard of Wyckoff, but thank you. Motion, thank you. Take a look at that. Siri wants to take a look at Micron. We'll take a look at that. Hold on a second. All right, so let's continue. So currently today, so let's do a covered call at 66. Oh, that's what I did this morning. She opened up at 65 and change. 66. All right, let's get this out of here. Okay, let's change this to covered stock. There it is. The 66 is right there. Okay, just one contract. Okay, you figure out how many you can do with whatever money you have. Okay, and this is where you probably should have paid attention in algebra class and left that little girl, with little ponytails. You should have left her alone. Mr. Hill. Yep. Well, what you got? Great question. Did everybody hear that? He's concerned with the earnings coming up on the 20th. So how does that affect the trading? Well, two things. Number one, I don't go by earnings only because I've seen positive earnings where stocks go down. Can you imagine? Company says, hey, we made a lot of money. Well, then why did the stock go down? Don't know. We've seen negative earnings. We missed our didn't quite get what we wanted. But then the stock goes up. But some stocks do react either negatively or positively directly related to the. Someone came up with the magic bullet theory. Believe it or not, someone actually came up with magic bullet theory. Okay. Hold on a second. I think this is funny as hell. The magic bullet theory. If you understand what the magic bullet theory is, okay. A bullet being shot goes in one direction. It stops in midair, turns 90 degrees, proceeds 3 feet, stops again, turns another 90 degrees, then changes its angle and continues forward. That's the magic bullet theory. And some scientists figured out it's possible. I'm sorry. I was in the military, right? Shooting guns, all that kind of machine gun. It was kind of fun. Okay, I never ever seen a bullet stop and turn. But that's the BS they want you to believe. Okay, magic bullet theory. Hey, thanks, Ulrich. Like to entertain people. So Ulrich, the third guarantee in life. Are you ready? You're gonna love it. Death, taxes, and disappointment. You're definitely guaranteed to be disappointed in your life. Okay. Trump warns Iran civilians to evacuate Iran tonight and goes into safe shelter. Oh, cool. Finish work for Jesus. Kroger EX date is on August 15th. How will you hang on to it to get the dividend payout? See, you're under the impression that I'm looking to get the dividend. No. I only use the dividend to tell me when to buy the stock. Because a dividend is more like the starting pistol in a race. Bang, you know? And it's like, okay, this is when the stock usually moves. Okay? Dividend stocks have a tendency to increase just before the dividend is paid out. So knowing that information, I can go in with a safe trading strategy, make a quick little profit and get on out. Because after the dividend is paid, stocks usually have a tendency to go down. So why do I want to collect the dividend? And here's a good point. You're gonna love this. You ready? Hold on. Sit tight. You're gonna love it. Sit tight. Watch this. Okay, let's get out of there. Oh, wait a second. We didn't find out what the profit was there. Hold that question. Okay, let's go back to. Let's go back to this trade. So we can finish this trade first. This is the one I did. It made a nice little profit on it. So let me just recreate for you. See. I got three or four questions I want you to ask. That's it. Three or four. Don't ask them. Ask them to yourself. Number one. Does it make sense? Number two. Do I like this company? Whatever company you look at, that's a question you really ask yourself. Number two, do I like this company? Am I willing to hold on to this at this price until the day I die, I pass it on to my children? That's how I want you to feel about everything you buy. Because why else would you buy something if you don't feel deeply buy it? Why would you buy it? Okay. Number four. Do I like this price? Am I willing to cover every single week some kind of cash flow? Now I can't afford to buy a Kroger's grocery store. But I can afford to buy a couple hundred shares of grocery stores and get a weekly return without having the bag groceries, without having stock shelves, don't have to mop the floor, but I can benefit from it on a weekly basis. Okay, that's the way I look at things. I'm creating what is called cash producing asset. I love Kroger. I do. Haven't been there much because it's not in this particular area. But anyway, let's keep on going. All right. Remember when I said I want simple, consistent 1% per week? Break it down a little. Simple. One of the simplest trading strategies there is. The most simple trading strategy, buying the stock. But there's no profit there. There's no profit until you sell something. Well, if you buy it, you have to wait for it to go up before you get your profit. And you don't know how much that's going to be. Well, I don't want to do that. A covered call. However, I'm buying stock and I'm selling the right to someone else to buy it from me. All right, so follow me for a second. Right? If I buy it at 66, where the hell is it? If I buy it at 66, I sell somebody the rights to buy it at 66. The only money I'm making is the transaction fee or the premium. If that is $163 per contract. Each contract $163. Okay. How many contracts can I afford? Well, let's take a look. Take out my trusty old calculator. Okay. $163. 163. All right. 163. Divided by cost of trade commissions and fees. Now, this is not spending. See, people have this concept between spending and investing. Okay. You're investing. You're not spending. Because here's the thing. If you pick right, the value will stay steady. You will own. Here's your little Kroger store. Okay, what's your Kroger store costing you? Your Kroger store is costing you $6,400. So you own a cash producing asset called Kroger. And every single week you have the ability to make money from it. Well, how do you figure that? How do you figure that? Well, you sell a covered call. This week I'm getting 163. 163.50 this week for this Kroger stock. Okay, think of it as a cash producing asset. So I'm buying Kroger in a box, whatever you want to call it. But it's giving me $163 this week. So let's do some quick math, and we'll dive deep into it. So we take the profit, $163.50. We divide that by the investment. Now remember, it's an investment because when you sell your Kroger, you're getting all that money back. Because remember, rule one, buy something you don't agree with. Rule two, never sell a loss. So this investment should hypothetically never go down. You should never sell for less than you paid for it. Now I have no control over what you do. That is a self-directing thing. You got to figure it out for yourself. But you think about it. Why would you buy something today? And then next week sell less than you just paid for it. That makes no sense. The hell you think? I love that. Hell you think? Think about it. Does it make sense? I hate to be what do you call that? Common sensical. Ooh, commonsensical. I'm not Republican. I'm not Democrat. I'm commonsensical. I like that one. I think I'll do that as a T-shirt. I'm not a Republican. I'm not a Democrat. And then it will be a red and blue shirt. It will be a purple shirt. Yes. Purple shirt. Of the new. What do you call that? New political movement. Purple. It's not red. It's not blue. It's common sense. Think of it. That's great. We'll go back to teaching. Let's get back to what we're doing.
All right, so the profit,
163.50. Cost of the train, commissions and fees, 64.37. So divide it. 63.47 comes to a grand total up. Holy 2.5757. Now that doesn't sound like a lot, does it? But add it up in your head. 2.57% per week. Now I told you I average 1% a week, which is per year. Okay, 2.57 is more than 100% per year. And it's a company that's owned by Warren Buffett. But he doesn't own the company. He owns the stock. Okay, so he owns a bunch of the stock of Kroger. So if it's good enough for him, it's going to be good enough for me. So he has his own little. His is probably bigger. But mine is going to be small. I don't have as much money as Warren Buffett has. Okay. Please explain what happens if the stock skyrockets past 80. People typically don't understand that.
Hold that thought. Okay, I get it. Okay.
So the question on the floor at this moment in time: what happens if the stock jumps up? Well, if I buy it at 66. I sell somebody the rights to buy it at 66, and the stock jumps up. Well, guess what? Whoever bought it, the opportunity to buy it from at 66. More than likely, they're going to take it away at 66. Terribly sorry. The difference between the 66 and the 80 now belongs to the person who gave you the 163.50 per contract. What are you looking for? I'm looking for the 1% every single week. Does this happen? Yeah, it happens a lot. I get 1% a week. Jumps up. Whoever bought that from me, they made a profit. Well, here's the thing. Okay, you understand what a bear is and a bull is in the stock market. Bears think the stock's going down. Bulls think it's going to go up. Well, here's the thing. Bears make money. Bulls make money. Pigs get slaughtered. If the stock jumps up, fine. Share the profits with someone else. My goal is simple, consistent 1% per week. Okay, if I get by 1%, great. If not, fine. Okay. If the stock goes down, I just keep write another covered call. Bring in some more. Is it going to be 163 again next week? I don't know. Because here you go. A quote from John F. Kennedy. We cannot answer the questions of tomorrow with the knowledge we possess today. I know today that I did this because I did it this morning. Okay. I got like 3 or 4% this morning. Okay, because I did it early. But so I don't know what's going to happen now and Friday when it expires.
The purple party. I like that. I get a t-shirt. Purple. I'm not Democrat. I'm not Republican. I'm commonsensical. It's going to be purple. The purple party. Yep. After you roll an option to the next week, can still be called away anytime. Absolutely. Scott.
Here in the United States, the question is if you roll an option to the next week, can it be still called away at any time? Absolutely. Here in the United States, options are exercisable anytime, anywhere. What the hell are you thinking? I like that. It's funny. So think about it. Anytime. It can be called away. But if you're setting it up in a manner in which the numbers are in favor, then why are you worried about it? See, if I buy it at 66, I will hold on to it until the day I die, or until someone buys it from me at 66 or higher. Because I will roll it every single week. Now, here's the thing. I'm getting 2.57% this week. Now, if it gets close to 66 by Friday, I have an opportunity to do one of two things. Number one, I can let it go. Someone take it from me. Number two, I can roll it into another week and see if I can get more money out of it. Oh, why the hell not? It's Kroger. Okay. But there is going to come a time. Trust me, there will come a time. If the stock keeps going up and up, you cannot roll forward a full 1% anymore. For me, that's time to let it go. Wait for it to pull back and jump back in again. Well, I like Kroger. It's on my list. It pays a dividend 4 times a year. And 4 times a year, I look at it. Is it time to buy? Is it? It's a yes or a no. Because they do the same thing over and over. They go up, they go down, they go up, they go down. That's it. What's your entry on Kroger? Kroger earnings this Friday, so something to watch. Thank you. Can't I just date the stock? No, you can't date the stock. So, what was my entry? That's a good question. What was my entry on Kroger? Hold that thought. I'm gonna have to borrow this phone for a second. Hold up while I look where I got my Kroger at. Alrighty. And come on. There it is. Right there. Kroger. 65.94. All right. So I got my Kroger at 65.94 this morning. Okay, because we saw it last night. For those of you who were here last night, we saw it last night. And it was not a recommendation. No, it was not a tip. It was just us looking at stocks, me pointing out the numbers, and me saying, oh, I like that. I think I will do that. I did not make a suggestion to anybody. Okay. Now we take a look at stocks every single night. Every once in a while, will pop up and say, buy me. So I write it down and I buy it the next day. I don't give anyone suggestions. I tell every single night. Do your own research. Never blindly listen to anybody on YouTube or TikTok, wherever the hell you're viewing it on. All right, so let's keep on keeping on. Kroger. Wait a second. Hold the phone. Because I didn't tell you the best part about my trade on Kroger. Now, I've been trading for over 20 years. Now, I do not suggest any of you do this until you understand the risks involved. All right. Now, I'm sure you've heard of margin. Margin is when you put up X amount of dollars, and the broker you use gives you the same amount to play. So if I put up 100 grand, they're going to give me 100 grand. So now I have 200 grand to play with. But half of that is their money. It's called margin money. So right here, it tells you exactly what this trade is costing me on margin. And then my rate of return increases. Ready for this? Let's check this out. Okay. Calculator. Now it's the exact same profit because it's the exact same trade. But two different answers. Let me explain why they're two different answers. Answer number one, if your account is all cash. Now, all cash means it is the safest trading account there is. So if the stocks drop, you don't lose anything until you sell the loss. So remember rule 2, never sell the loss. Stock drops, the companies increase their dividends every year, so you're getting more money every year anyway. Okay? So here's the thing. Profit's still the same, 63.50. 163.50. Divide that by instead of cash, cost of trading commissions and fees, 6,337. Buying power effect 3,136. That's how much cash of mine is. The rest of it is margin. Borrowed money. Never borrow money until you understand the risks involved. Okay? That's probably the only advice I actually give. Never use real money. Do a paper trading account first until you can do it blind. You know everything. Because in the back of your head there will be a voice telling you you're ready to do real money. You're ready to do real money. Let's put some real money on. You will know when you're ready until you're really good at it. Paper trade. Don't risk money until you're good at it. Never do margin until you understand the risks involved. So let's take a look at the rate of return on margin this morning. Okay, so 160 is the profit because the trade doesn't change. Just the amount of money I have on the line changes. So let's divide that by buying power effect 31.36. 36. 5.2%. Do you have any idea what 5.2% every week looks like? Seriously. 5% every single week. If you have 100 grand, that's $5,000 a week. Well, that's nice. If you have $100, it's only $5 a week. Get $10,000, it's only $50 a week. But still, 5% every single week. Do the math. Calculate right there. Let's do it right now. 5.5% multiplied by 52, because it's 52 weeks in the year. equals 271%. Now, can you get that every week? No. Do I get that every week? No. Average. Okay, my average is 1.4%. That's my average. Okay. Sometimes I don't make 1%. Sometimes I make more. But it's an average. And it's boring as hell. Because I do the exact same thing. Week after week. Okay. Can you do your strategy with 30K? Sure you can. Okay. Design. Okay, buy some shares at a good entry, sell for a profit. You're not collecting premium. That'll work. But you gotta wait for the stock to move. I don't. See, if I'm making 1% every single week without doing anything for the stock, not doing anything. Now, what you're saying, yeah, it could work. Okay. He's saying buy the stock, wait for the stock to go up, and then sell the stock at a profit. Yeah, that works. But you're waiting for the stock to move. Now, what happens? The stock just goes sideways. You collect nothing. So I don't do it that way. I sell a covered call. I buy it for price, sell for the exact same price, and I collect that premium, 1%. Great, I'm done. I'm not looking for the stock to become a circus monkey. Okay. Hey, do this, do that. No. Stay right where it is. I really don't care. As long as the company's consistently profitable and has weekly options. All right. So I had a couple of questions. Let's see. If the stock keeps going, let's say 20% or more, have roll it many times, buy the option back, and still keep the stock premium, and then sell the stock for a gain. Unfortunately, it doesn't work that way. As the stock increases, so does the value of the option. So you think as the stock increases, I can buy that option back and then sell the stock. Nope, won't work. Because as the stock goes up, the option goes up. So we try to buy back that option. You're actually digging into the profit. So by the time you buy back and sell the stock, you're at a break even. It's like just basically a waste of time. And only one's there is the person collecting the commissions. Take your profit. Say thank you very much. I'll see you drop back down. Better level to jump in again. Okay, this is what I do. I'm not telling you what to do. I'm just telling you what I do. Because I did it with U.S. Steel twice this year. I bought it. It went to a point where it didn't make sense to keep that money tied out for 0.5%. Let it go. Pick another stock and let it go up. There's no specific time when you're ready. I'm not quite sure what you mean by that, Edwin, but okay. Explain the pros and cons of Misty. MSTY does not have 2 decades of profitability. I don't even look at it. I only look at it when people ask me to look at it, and I tell them why I don't like it. Okay, when I say 2 decades of consistent profitability, Misty is 18 years away from that. Okay. Now, stock market's been around for 400 years. Why would I do anything less than 20 years old? All right, what else we got? Okay. The alternative version of my question. The stock will go up. Why use a covered call? Wouldn't a call option be better? That's a great question. Now, number one, it's not guaranteed. Stock has a tendency to increase in value. So if you buy an option, what he's asking, buying the option more profitable. Yes and no. Yes, if you're right. No, if you're wrong. Here's the statistics. 80%. 80% of all options expire worthless. I do not buy options in any way, shape, or form unless I'm getting out of position. Okay. Now, if 80% expire worthless, wouldn't I want to sell them, buy them? Could be on the 80%. I want to be on the 80% side. So no, I don't buy options. Okay, and if you're wrong, will you lose that money? Well, if I'm wrong, I still keep the stock, and I still keep the income. Okay, rule number one. Never buy something you don't want to own. So why would I buy a call if it's 80% possibility of expiring worthless? buying the stock. I own the stock until I decide to sell it. Now, if the company consistently increases its profits every year, I'm getting higher dividends. And I have the opportunity. I don't have to, but I have the opportunity to sell covered call every single week. So don't get me wrong. A lot of people buy options. It's great. Does it ask for every saddle? Nothing wrong with that at all.
I was responding to his comment, facts, blah, blah, blah. Okay, great. Hood is another strong stock. Unfortunately, Hood does not have 20 years of increased profits. So I don't trade Hood. But Chipotle, call $50, expire 5/19, it's losing. I don't know what to do. What should I do? Okay, so unfortunately, Tamiko, I can't tell you. Well, I can tell you what to do, but I'm not going to tell you what to do because it would be a disservice to you. Because I know absolutely nothing about you. I already told you. I don't buy options. I cannot give you advice on what to do with an option. I don't buy them because 80% of them expire worthless. Okay, so ask yourself the question: what makes you think you're in the 20% group? You're right. But 80% of the time, people are wrong. Right? So I don't buy options. I can't give you any opinion on that whatsoever. Other than telling you I don't do it. And the reason why I don't do it. I want safety, and I want preservation of my capital. Safety, preservation, and I want profitability. Okay, that's what I'm looking for. I don't think he does Misty or Tony at all. No, Karam, I don't. Because neither one of those have numbers that actually substantiate what I'm looking for. You need a stock to move on high volume. No, Edwin, I don't. I need a average, everyday, normal stock. Okay, IBM, AT&T, Ford, General Motors, ConocoPhillips, Consolidated Edison, Home Depot, Lowe's. Hey, these are companies you know, heard of. Those are the only ones I do. 2 decades of consistent profitability. You know them. Johnson. Colgate, Palmolive. Okay, Bank of America, Wells Fargo, whole bunch of them, 300 of them. All right, let's keep on. What else we have? What else do we have? Okay. Selling covers calls is the way to go. Thank you, Bones. I'm late to the party, but are we talking about options or common stocks or option strategy? Okay, G4, we're talking about investing in dividend stocks for a weekly cash flow using a safe, consistent 1% trading strategy called against a qualified dividend stock. Those are companies that can be profitable for at least a minimum of 2 decades. Got it? Good. All right, let's keep on. Can you share 3 stocks this works well with? Okay. Ready, Kingman? Dividend Kings. 54 companies that consistently increased their profits 5 decades. Okay. Dividend aristocrats. 67 companies that increased their profits for 25 years. Dividend champions. 150 companies that consistently. Check that out. 150 different companies. Dividend contenders. 300 different companies. Then you got Warren Buffett's list, which I have no idea how many are on that list. Great system and contact. Josh, do you have in-depth video on this strategy? Josh, believe it or not, you go to my YouTube channel, you're going to see over 1,000 videos. Can you believe that? I got over 1,000 videos on YouTube. That's not including the shorts. Not including TikTok. Not including. Well, I've been online way too long. All right. Awesome. I'm following you now. Good stuff. I'm here every single night, G4. All right, so let's keep on. Harry wants to take a look at Verizon. Terry, let's take a look at Verizon. All right, let's get out of this one. We gotta get out of this place. If it's the last thing we ever do. All right. So next, we're looking at. When you say 1% weekly, do you mean 1% unrealized gains weekly? No, Holly. Okay, Holly.
Okay,
I sell a covered
every
call
single
now,
week.
There's a difference between realized and unrealized gain. When you
sell
something and you bring money in, that is a gain. When something increases in value, that is an unrealized gain. Understand? So when I buy a stock, I own the stock. Until I sell that stock, it's neither a gain nor a loss. It is an unrealized gain or loss as the stocks go up and down. Now for options, when you sell an option, that's cash coming in. That is a realized gain. Okay. Your resident. Hey, dude. Hakuna Matata. How are you today? Good evening, sir. Long time no see. Hey, believe it or not, I'm still the same thing. Hey, you never sent that book over that you said you were writing. I'd like to take a look at it. Yeah, Gurdit done it. Okay. Thank you. How much do you make on your best week of training? Not quite sure what you're meaning. Do you mean trading or training? I make nothing off of this. Believe it or not, you put some on 1,000 people. You get. I make what, 5 cents a night. That's about it. It's terrible. But I'm not what I'm doing it for. I'm doing it for video content for my children. And someday, my mom's at that point in her life. Okay, she's in her age. We know it's coming. All right. At some point, I'm going to be in the same position. But I want to be able to leave everything I learned over my lifetime to my children, my grandchildren. That's one of the reasons why I'm doing this. How much do we make on my trading? Can you do this with 30K? Yes, you do. Yes, you can. Now, 1% of $30,000 is $300 a week. But think about it. $300 extra a week with minimal risk. Now, the reason I say minimal risk, because rule number one, never buy something you don't understand or don't want to hold on to. If it doesn't make sense, if you don't know what it is, you don't know what they do, buy it. Okay, if the numbers don't look right, don't buy it. If it's not consistently profitable, don't buy it. If there's no way to get the cash flow from it, don't buy it. Okay? I'm not telling you what to do. I'm just telling you what I do. I'm looking for consistency and profitability. Because for me to invest in a company that's not consistently profitable, it doesn't make any sense. No, I'm terribly sorry. Okay? I want to be correct. And I don't have to be correct all the time. I just want to make sure what I'm buying I'm okay with. Good to see my Tempest AI is at 50% unrealized gain. Okay. Unrealized doesn't mean jack squat anything because you can't pay bills with an unrealized gain. Terribly sorry. Just because the stock goes up doesn't mean it's a profit. It's not a profit until you take it. Okay, Holly. It may look good on paper, but unless you can pay the bills with it, it's not a profit until you take it. All right. Awesome. Following you got that. Cool beans. I know you are a fan of TEM. I've never even heard of TEM. Okay, hold that thought. TEM. What the heck is TEM? TEM. Tempest AI Inc. TEM. Okay. It's at 72. Okay. I'm going to say no for this week. Reason being. Okay. Reason being. Here's our. Go over this side. Here's our low over here. Right around 50. She jumped up, pulled back, shot back up into 74. So from 50 to 74, that is a 50% increase. Think about it. 50% increase here to here. Do you really think people are going to hold on? 50%. Maybe I'll take it. Maybe I won't. Because I can guarantee there's a whole bunch of people. Look at million shares traded today. Stock goes up, you don't take a profit, that's your own fault. It's not a profit until you take it. You want to know something interesting, Holly? Nobody ever went broke taking profits. Okay.
Don't. You remember. I just need to finish the last part. Some of my notes. Okay, your residence. I don't all my notes are in book form. I don't do any of my notes on a computer. I'll take computers as far as I can throw them. Yes, I know what it means. Sorry, Holly. Oh, someone else handles your private messages then. No. Actually, they don't. I take care of all my own messages. Because contrary to what you may think, this is not a business enterprise. This is just a hobby. Okay, I'm not at a point to do anything. As in that type. Okay. All right. I must have misunderstood. I thought you buy to get the dividend and the premium from the covered call. No, I'm not looking to capture the dividend. I'm looking to capture premium from the covered call sale. That is usually more than 1%. Let me show you something you might like this. Let's go to Market Watch. Let's get this out of the way. Let's take a look at General Dynamics. Okay, General Dynamics. Right here. The 3rd of July. General Dynamics has a $1.50 dividend. Okay. How many weeks is that? Okay, so we're here. That's 3 weeks away. All right. So remember these numbers. 3 weeks away. Right now the dividend is $1.50. So let's go and see what the premium for General Dynamics is at the money. Okay. General Dynamics. Okay. So General Dynamics at this moment in time is at 281.80. Okay, so the 282. Oh, the 280. Wait a second. 179 is last trade. So we're looking at the 280. Last trade. 279.29. Closest strike price is going to be 280. The 280 is going for $2. 1 week. I can get more than the dividend. And I got 3 weeks before I capture this. So hypothetically speaking, all right. See the number right there. The 280 is going for 205. All right. Stock traded at 279.29. So if I buy it at 279.29, sell some of the rights to buy it from me at 280. Well, I collect the difference between 279.29 and 280. Well, that's a little bit more money. But I'm also collecting the 205. All right. Every week. Take a look. Back to the Market Watch right there. So today is the 16th. So that's $2 or almost 1%. So 1% here. Okay, that's $200 here. $200 here. $200 there. And the dividend. So if the dividend is less than the premium, why would I want to collect the dividend? See? The dividend's $1.50. The premium is $2. Come on, we all know our math. We all know that $2 is higher than $1.50. So why are you looking to catch the dividend and not the premium? Okay, so if I buy it right here, the current price $279.29. Sell it $280. I can pick up $205. That's more than the dividend. That's just for this week because I can do it again next week. Here we are. Here it is again. Next week, and then the week after, Okay, week after. I can do it every single week. As a matter of fact, I can jump over these. Go right to this week and pick up 430, which is a lot more money. See, you have a lot more options. With options. Isn't that weird? More options. With options. Okay. So my goal, simple, safe, predictable, consistent 1% per week. Alrighty. Now, does anyone else have a good stock to take a look at? Days over. Take a look at Ford real quick. Ford. Here we go. Now I'm gonna click the button, counting your head how long it takes to figure out those five things. High, low is direction.
Okay?
High, low is direction. Okay? 3 to 4 seconds. That should all it could take.
Aren't you getting both if you're holding the stock? All right, Kevin. Sometimes you will collect both. Sometimes you will not.
Now I would prefer not to collect the dividend because stocks have a tendency to go up just before the dividend date, and then they have a tendency to go down after they pay their dividends. So I prefer to get it out, move on. But you know, everybody's different. You may find something else that you may think differently.
Okay. Albert. BR. My. 110 Beast doesn't think 1% a week is sustainable. Ooh, you have no idea. I love naysayers. I love naysayers and negative people. Because they say if you don't have trolls and negative people, you're not doing your work properly. Well, I kind of need a little more because I only got one tonight. Only one. Wait a minute. No, two tonight. Okay, hold on. 110 CB. I guess he wants to see this because he's relatively new. So where are we? Right here, and we're going to go there, and we're going to go here to the website. To the website we go. There it is right there. That 10-minute trade. Do you see that? Does that sound familiar? Simple, safe, predictable, 1% simple, safe, predictable, 9 p.m. That sounds familiar? That's me right here. Okay, so we're going to go into the little hamburger right here, and we're going to look up, weekly trade 2025. Now, just in case you didn't know, 110 CBs. We are currently in number 24 of the year. 24 for the year. Week number 12 for the quarter. Okay, 13 weeks and a quarter, and week number 12. Next week is week number 13. Week after that is week number 1 of third quarter. Okay, so we're in week number 23. Okay. No, week number 24. So here you'll see weekly trade. Now remember, I have 7 different accounts. 7. I share 3 of them public. So here they are. Count 1, count 2, count 3. The numbers are all there. So you think 1% a week is not sustainable. Right, so let's go all the way back to week number 1, which is the first week of the year. That's 8, 7, 6, 5, 4, 3, 2, 1. Now, do you want to look at account 1, 2, or account 3? Well, let's take a look at all. You ready? Account 1, 2, 3. First week of the year. 6.19, 1.8, 4.2, 2.33, 1.7, 1.89. Week 3, 4.8, 3.6, 1.8. Week 4, 2.3, 2.02, 3.3. Week 5, 3.8, 1.2, 3.5. 3.01, 1.59, 3.78. 1.4, Shall I continue? Or do you just want to take my word for it that I average over 1% every single week? There's on the trade. Pick out anyone you want. Here they all are. Coles, Riley, Harley-Davidson, Walgreens, Altria. Credit. And here's the numbers right there. Add them up yourself. Okay. You got 50 contracts at $6 a share. $300 just for that one trade. All the numbers are there. So benefit of the doubt is always a good thing. Okay, you don't believe me? Fine. You don't have to. I really don't care one way or the other. I put everything up there to be as transparent as possible. I come here and I share information free. And I don't ask for anything. And then you insult me. Okay. I see where you're coming from. Let's go back to where we were. Alrighty. So it is 11:18. Usually reserve this time to answer questions. Let's see what we got. Interactive broker. I looked at them. Lynn wants to take a look at GP. What the heck is GP? Lynn, just a little bit of a heads up. Anytime I say what the hell is that, it's usually going to be a no. Usually. GPT group. I spelled it right. GPT. Well, it says we can't find this symbol. That gives me a little bit of a that's a no vibe. Okay, if Charles Schwab, one of the biggest brokerages in the United States, cannot find it, it probably doesn't exist. So I don't know what your GPT means. So you get 1% a week, all of 2022. I wasn't showing 2022. I was showing 2024, 2025. 2022. Do I have? I think I do. Hold that thought. Hold that thought. Where are we? No, I don't want that. I'm going to go over here. See if I can find it. Let's see if I can find it. Nope, I didn't want it to do that. Nope, didn't want to do that. Okay. All right, you're gonna have to come back tomorrow. I'm gonna have to find it. I actually save all the trades that I do. Hold on a second. Hold on. Okay. Hold that thought. Oh, gotta wait for it to open up. Okay. So this is my trade history for today. I'll take a picture of that, and I'll put it on file. Okay. And I'll put today's date with it. So every single trading that I have will have the timestamp. What kind of a trade it was? How many it was? And was it a profit or a debit? Over there. And then I'll add it up. And what does it come to? Okay. I show those numbers every single week. So let's see 2022. You don't have to wait on that one. I don't have that one posted. Let's get out of here. All right. What else do we have? GEV. What the heck is GEV? GEV. Interesting. GE Vernova. What the heck is that? Sorry. I'm trying to find it easier, but it's somewhere in my computer. It's not something I usually jump into. People usually don't ask me. She probably means chat GPT. Yeah, no, that ain't gonna happen. I must have misunderstood. Dividend. Yep, get that one. You have to leave some meat on the bones. If you ask for a higher premium, you might not sell the option. Absolutely, Chase Jack. You have to got that. Also, you mentioned making a trade on Kroger. We already did that one. I got my 2% on Kroger today. If it sells Friday, we'll get another 2%. Nice going, Jack. Thank you. Appreciate the session. Cool beans. What do I like? Do I do not. Howdy. What's going on with DJT? Doesn't have dividends. Doesn't fit. Sorry. I'm looking for consistent profitability. DJT is not 20 years old. No way it has 20 years of profit. Estee Lauder finally got a break today. Cool. I like Estee Lauder. Let's take a gander. Estee Lauder. Ooh, wait a second. That's an idea. I knew I had it somewhere.
I think I may have found it. That's 2025. I don't want that one. Screenshots. Do I want that one? I don't think so. Stock market. That could be it right there. Oh, found it. 2022 trades. Hold on a second. See if I can get this right. Okay. Open. All right, here we go. Check that one out. April 4th, 2022. April 4th, 2022. April 5th, 2022. April 19th, April 29th, December 2nd, December 7th. Yep, I got a whole bunch of 2022s right there. And do I know what it is off the top of my head? Terribly sorry, dude. Okay. I don't live in the past. What happened in the past. I like to look at this week, and I like to look at next week. Okay. So 2022. Don't know, don't care. Okay. It's not 2022 anymore. I'm past that. And there's no way to disprove what I've done in the past. Because I'm just doing this for the fun of it. Okay. I'm not selling anything. I'm not asking you to buy anything. I'm just sharing information. Either it makes sense, or it doesn't. Or it one or the other. Believe it, don't believe it, don't really care. All right, let's get out of that. Let's get out of this. Let's get out of that. Anyway, let's get back to where we were. All right, back to where we were. What else do we got? Estee Lauder. Cool. I'm going to say no to Estee Lauder only because take a look right there. Okay. You bottom, you top. Not some place I want to buy. Okay. I buy low, which would be here. See, it went up, pull back. Then you have congestion here, consolidation, whatever you want to call it. 2 days to the upside. On the third day, I would jump in, take up the cloth and get it. It's a good strategy. It's not possible forever. 1% compound be a billionaire. See, I love it when people automatically assume that I have more money than I got. Number one, and number two, that this is my only thing that I do. Terribly sorry, dude. I spend 10 to 15 minutes in the morning. I get my 1% done and over with. Greed has gone by me a long time ago. Okay. Money is no longer a driving factor for me, but it is a necessity in life. So 1% every week for my bills. I don't need anything over that. Okay. I've never ever seen a hearse go by with a U-Haul. Never. So whatever it is you're striving to collect along the way, you ain't taking it with you. Okay. I use my money sparingly to pay my bills, to help out my kids, take care of my mother, those kind of things. I'm not looking to be a billionaire. I'm perfectly happy where I am. Matter of fact, I like to stay incognito. I like to go through life as if a fly on the wall that nobody notices. That's me. That's what I'm looking for. She's 20 years a public company. Skit B. What are we talking about? Skit B said something, but I have no idea. There it is. She's probably ChatGPT. I don't do ChatGPT. Hasn't been around long enough. Yes. ChatGPT 20 years old. When you sell a put, should I use the bid or the ask price? Tamiko, I have no idea what you're talking about. Now, like I said earlier, I don't. You're talking about selling a put. Would you? The one that says sell. You take your cursor. Okay, wherever you put your cursor, watch this. See a little thing right there moving around? Right there. See it moving around? Okay, right there, little cursor. Okay, the cursor will tell you exactly what you're doing. You bring the cursor over there, it lights up and says sell. If I slide over there just a tiny bit more, it lights up and says buy. It'll tell you exactly what you're doing. Low battery. Low battery. YouTube. There we go. MPW. Love MPW. Hey, 86. What's happening, dude? Nice to see you, brother. Okay. Steven. MPW. I actually have Estee Lauder was privately owned until not long ago. I thought.
Well,
Estee Lauder is a public company now.
And no,
I would not
buy
buy at the high of the year. I never ever buy anything at the height of the year. To me, it doesn't make any sense. Why would you go on a journey where someplace you've never been before? Okay, Stephen wants to take a look at MPW. Now, I do have some MPW. Okay. Take a look.
The high, the low, where it is. Look at this. Up, down. It's dropping from here. The high is 660. Right now we're at 443.
Okay. Well, let's jump the gun and go right to the last 30 days. Here's your last 30 days.
30-day high, 30-day bottom
is Friday. Well, today is the first day to the upside.
Now remember, I like 2 days to the upside. So if tomorrow is an up day, great. I'll be really looking forward to Wednesday. Is Wednesday going to be the third day for me to jump in? Because the bottom's right there. 30-day top, 30-day bottom. Okay, today was one day above the bottom, which was Friday. Friday's the bottom at this moment in time. Now tomorrow will be a different story. Is it going to be higher tomorrow, or is it going to be lower tomorrow? Well, we won't know until tomorrow night. Isn't that great? Cliffhanger. Stay tuned. Next week on TV today. Yeah. Pfizer. Laurie, we'll take a look at Pfizer tomorrow. It's 11:30. I'm out of here. You guys have a great night. Oh, for those of you in the morning trading group, just a quick you'll be getting an email in a couple of seconds saying, I'm not going to be there tomorrow morning. So it's going to be a little later on because I have emergency dental appointment 9 a.m. Okay, they squeeze me in when they can squeeze me in. Tomorrow morning. So that's what G4. You're welcome. You guys have a great day. You guys over here. Hell of a lovely evening. And over there. And over here. And now the end is here. And so I face the final curtain. My friends, I'll say it clear. Turn the damn thing off. I'll state case for which I'm certain I've lived a life that's full. I travel each and every highway.